We're just hours away from the big deadline in President Trump's trade war. At midnight, major tariffs will go into effect on imports from countries around the world. The only exceptions, the few countries that have reached deals for lower or delayed rates. This morning, President Trump announced that Mexico, the United States' largest trading partner, would receive a 90-day pause to allow for more time for more negotiations. And sources inside the administration tell CNN that a series of last-minute deals and positive economic indicators have Trump feeling emboldened to proceed with tonight's deadline.
The so-called economic experts repeatedly said that the American economy would be in a recession this summer. Well, summer is here. It's almost over, and that recession does not exist.
That recession does not exist. And it's true, we have not seen a recession this summer. But the broader economic picture, pretty mixed. GDP rebounded in the second quarter. Consumer spending rose last month, but so did prices. Inflation and job growth and income growth have both slowed. The truth is, we just don't know what impact these tariffs are going to have on the economy because they haven't gone into effect yet. But that, of course, changes tonight. And after he has spent months blaming Joe Biden, blaming Jerome Powell, Donald Trump's signature policy will become reality. And, for better or worse, he'll own the economy that follows.
I got all these phone calls from my Wall Street buddies, and they were going crazy. They're like, you don't know what you're doing. You're going to destroy the market. And let me tell you who the experts are. Donald Trump and his trade team have proven the EU pays, Japan pays, Korea pays, Vietnam pays, the Philippines pay.
A lot of people, Maria, talk about Donald Trump for the Peace Prize, the Nobel Peace Prize. I'm thinking that since he's basically taught the world trade economics, he might be up for the Nobel on economics.
Okay, our panel is going to be here to weigh in just a moment, but we're going to start with CNN chief domestic correspondent Phil Mattingly, also our explainer-in-chief here at CNN on matters such as this. So, Phil, a little less than 8 hours until this self-imposed tariff deadline. What do you expect?
Head on a swivel, right? Head on a swivel, Casey. You, the panel, be prepared. Never know what could happen over the course of the next... I laugh a little bit about it, but honestly, that's kind of been the case over the course of the last several days. And our colleague, Elena Trine, who was reporting that the president felt emboldened on the issue of trade and tariffs. Everything I've heard is exactly the same, and that's been the case over the better part of the last couple of weeks. And I think that's because of a couple of elements here that are important to put together to understand why we are where we are right now. And I'm not trying to follow in any way Peter Navarro or Howard Lutnick. How could you ever match where they are on these specific issues? But the president and his team do feel like they can spike the football right now, given A, where things were on April 2nd, but B, a series of dynamics that have played out underneath the broader economic picture over the course of that time period. First, I think, and foremost, the idea of retaliatory tariffs. One country has really retaliated, and that is China. There's still kind of ongoing negotiations with China about where things stand there. But every other major nation, major trading partner, did not retaliate. Over the course of the last couple of weeks, Casey, every other major nation came to the White House and continued to offer increasingly better options and proposals for the president to sign off on. That has made White House officials feel like they are very much in not just an emboldened position, but they had leverage all along, and they are at a point of maximum leverage right now, which means for those countries that don't have agreements yet, and there are not very many major ones still out there, is very clear. Canada is not going to move towards one anytime soon, at least before the deadline. India seems to also have pretty much run into a brick wall over the course of the last couple of days. But I think you can probably see if the president's going to sign off on extending the pause with China that's currently in effect, or at least the current state of play where things are right now. You mentioned Mexico earlier. I think the other thing you want to watch too, Malaysia, India, Canada off the table, Malaysia possible, seeing kind of where things go on this. I think the reality is this is real. And Casey, when we talk about kind of the market was exhausted over the course of 3.5 months, I think people were probably on some level as well. The president's got about 17.5% tariff rate for the country. It was 2.3% when he entered office. This is the highest rate in almost 100 years. And people are kind of chill about it. he got what he wanted, and he's getting agreements with a lot of questions. But he's doing what he said he was going to do. He's getting what he wanted. And how that plays out, I think, is an open question right now. But that's where he is.
No, it's a really, it's a big picture that underscores a real shift in, quite frankly, our global ways of doing business. Phil Mattingly, always grateful to have you. Thank you very much. All right, our panel is now here in the arena. CNN contributor, New York Times journalist and podcast host Lulu Garcia-Navarro, the former policy director for Mitt Romney, Lan-Hee Chen, former New York Congressman Max Rose, and the former chief of staff to Vice President Pence, Mark Short. And we're also joined by Shark Tank host, chairman of O'Leary Ventures, Kevin O'Leary. The thing I had for you was from the Wall Street Journal editorial board, which called our most recent GDP report the weirdest GDP report ever. And they say, if you think President Trump's tariff reductions don't affect the economy, take a gander at Wednesday's report for the second quarter of GDP. The economy grew 3% on an annual basis, but largely because imports collapsed. The crazy swing in imports shows how much Mr. Trump's up and down policies have disrupted business decisions and left companies scrambling to adapt. This seems to have had a negative effect on private investment, which fell 15.6% in the second quarter.
Well, look, I think you have to combine the first and second quarter GDPs because the first quarter, I think, was exceptionally low because of the trade agenda, and the second quarter is probably lifted a little bit high because of exactly the issue you say, that the imports fell off a cliff. That helps the GDP number go up. I think that it's odd to me, of all the issues for our party to import from the Democrats, that we would take Bernie Sanders' trade agenda. And I've never seen a Republican administration with more central planners than this one. I think that it's bad economics, but Casey, from a legal perspective, there's no precedent for any president having this authority. Today, in fact, inside the Federal Court of Appeals, there was an argument on this that I think did not go well for the administration, that I think will likely lose again. That, 250 years ago, the original Tea Party activists actually fought a revolution over the notion of the king imposing tariffs on tea. And here we are now, 250 years later, and it seems like the Republicans want to have a whimsical approach to leveling tariffs across the globe on every single country, friend and foe alike. And I think the economics are bad. I think it's bad for national security. And I think it's also something they're going to lose on legally.
All right, I think we've retrieved Kevin O'Leary from the technical wilderness. Kevin, what say you about all this?
I disagree with all of that. This is so simple. Let me lay it out. You go to Europe, you take an American product to sell it in Italy, they whack a 13 to 15% VAT tax, consumer tax. And you go to the airport, you get your money back, of which 1% people do. Same in Canada, same in Mexico, England, Switzerland, all the same. All that Trump has done, because we never had consumer taxes in the US, you can't get that through Congress, he calls it a tariff. Reciprocal, and kind of the highlight deal right now is the EU, 26 cats being herded. And Germany and France are a little, for lack of better words, pissed off. But what he did is he whacked them with a reciprocal 15% VAT tax in the US. You ship something over here from Europe, you pay the same thing they whack an American product with. It's not that complicated. And the market, because listen, I don't give a rodent's rear end about politicians. I care about policy. I have to invest. The market has absorbed this idea, and GM came out last week and said, okay, I get it. Our margins are down on car part tariffs, but we think we'll eat a third. We'll push a third out on price increases, and we'll use AI to solve the other third. No one's even talking about the productivity of AI.
That's the thing, price increases. People are going to pay more for their cars.
45% decrease in profits.
Okay, so tell me why the American economy right now is at its highest value in history. This is not an ad for Trump. I'm an investor. Something's working here. It's a policy decision. I'm a policy guy. The Europeans have been sucking 15% cash for 40 years out of America. And you're unhappy that we're doing the same thing to them? I don't think so. Get over it. Breathe the oxygen and be happy with your portfolio.